Our Sage Seeds artificial intelligence has pivoted strongly, urging us, borderline pleading to rotate into defensive stocks. We don't position our investments based on predictions about the future, which is why I'm telling you that right now, the landscape is evolving. The backdrop is changing. And in the world of defensive stocks, the AI has highlighted just one at the apex of what it means to be prepared in times of chaos. The $60 trillion fortress defending American interests around the world, as well as to a lesser extent Canadian interests, Mexican interests, and various European interests. The most undervalued defensive stock in this cycle. And in order to confirm what the AI might be seeing under the hood at a deeper level, we are going to study the economics of Bank of New York Mellon from the very beginning. Right here, a guide to the top custodian banks. By the end of this video, you will be aware of what the word custodian means. And yes, it's that same word we use for janitors and housekeepers, but there are few things as prestigious in the world of high finance. Sit back, get ready to learn some of the most interesting economics right now. Let's dive in so that your wisdom can blossom.
This video is intended for educational purposes. Opinions made by me or the Sage Seeds AI are not investment advice.
All of the sources I use will be linked in the description below. So just these first 2 bullet points. A custodian bank holds customer securities for safekeeping. If you've ever used the word banking and you don't have some picture of that in your head, then I don't know what you're doing. That is the essential basics of running a bank. A little bit more high-minded a detail, custodian banks generate fees from services that they offer to customers. Unpacking that a little, we have this quote from a custodian bank describing itself. Custodian bank holds customer securities to prevent them from being stolen or lost. These can be either assets in electronic or physical form, and in a world of chaos, financial ties are being redefined day by day, week by week. Custodian banks are quite literally paid to be the last line of defense, the final arbiters of how much money is in the world's most important bank accounts. Russia's lack of a strong custodian bank led to hundreds of billions, some people estimate a couple trillions, of US-denominated assets being first frozen, then fully seized and gone forever. We mean a big chunk of the Russian economy disappeared within a matter of hours. And that was essentially done by Western custodian banks overpowering and more or less raiding Eastern custodian banks. And so again, in the world of high finance, custodian means the elite guard that is quite often in the front line of capital wars. And as we just saw, it is important as an investor to remember one thing, which is that these warriors earn fees. Not interest income, but hard, cold fees for their missions. Custodian bankers are the world's modern mercenaries, and in any capital war, the best mercenaries raise their rates aggressively and still have a full list of contracts waiting to be taken. Continuing to unpack this, but we're going to use that metaphor I just laid out for the entire video. Well, here we have a more detailed breakdown of the types of contracts, missions that these custodian banks often take. They do safekeep stocks, bonds, and commodities, such as commodity metals and currency commodities. They arrange the settlement and literal physical or electronic delivery of transactions. They steward, aka collect information and income from such assets, as well as administer the tax documents for anything held in these accounts. And then we start getting into the more high-stake contracts. They administer the voluntary or involuntary corporate actions on securities. This could be voluntary or involuntary dividends, stock splits, business combinations, tenders, bond callbacks, etc. In times of crisis and chaos, which may or may not be on the horizon. Again, we do not make predictions on this channel about the future, but in times of crisis, this etc. becomes quite long indeed. I mentioned probably one of the most lucrative moments for custodian banks, that tearing down of a 1/5 of Russia's entire economy back in 2023, mainly in the early part of 2023. Well, that came from a relatively not that bad crisis. That time of crisis ultimately was resolved, or at least patched up quite extensively through the seized Russian assets. But no bank benefited more than the Bank of New York Mellon Corporation, which was, at the time, already arguably the largest custodian bank in the world, but since the 2022-2023 period has pulled ahead as the clear frontrunner, the largest global custodian bank on the planet. Don't believe me? Well, Wikipedia maintains some of the most current information on this, some estimates, but going to the custodian bank page, latest estimates put the custodian banking industry at around 230 trillion. This would be easily one of the largest industries on the planet, and nearly a quarter of that giant industry is in the coffers of Bank of New York Mellon as of around the last couple months. 55.8 trillion back in October of last year. I'm going to tell you that this is likely to reach 60 trillion as soon as the end of this fiscal year. And by the way, for my very informed tech nerds, or maybe some crypto bros thinking that none of this matters when crypto is going to take over anyway, the vast majority of these trillions of assets is already maintained on blockchains. And that shouldn't surprise you because, again, this is the elite of the elite. Nobody does cybersecurity in the financial space at the same level. Here we have some slides from the latest investor presentation. This came out January 2026. It is the most recent press release by the company. And they do trumpet their embracing of their own AI. We call it Sage Seeds at our business. They call it Eliza. They're already on 2.0. Half their workforce, down here in the bottom left, half their workforce was transitioned to a platforms operating model. That is not very commonly talked about yet, but if you were working in fintech, if you were working certainly in the Web3 space, you would recognize that operating model as quite necessary to keep up with the rapid pace of innovation on the frontier of technology. Now remember, Bank of New York Mellon isn't a fintech, it's the gorilla in the whole globe, not a single custodian bank larger. And it's out here launching stablecoin reserves, tokenized money market funds, etc., etc. This is now the third time I'm going to say it, but we do not predict a future filled with chaos. That's not what we're going to do here. But valuing this today seems to have the hallmarks of an easy dunk. A massive, strong, established industry player using its momentum and first mover advantage in order to absolutely clinch the lion's share of future blockchain-based asset accounts. And at the risk sounding conspiratorial for a second, go through the Citigroups, the HSBCs, the JP Morgan Chases, and find me a bank that up here in the top right has a lower NII sensitivity to an increase in the US money market rates. You don't actually have to do it because you have me, but the answer is there isn't someone with a lower sensitivity. Bank of New York Mellon is fully prepared to benefit from an increasing US interest rate, which today, I'm not speculating about what's going to happen in 6 months with the Fed. I'm saying right now today is fully in lockstep with the steepening yield curve. Looking at the downside risk, -3%, that elasticity of 3 is still damn good. But whether interest rates go up or down, Bank of New York Mellon has been extremely selective at culling these seized Russian assets. You guys remember 2022. Probably the most massive bank failure of that crisis was Silicon Valley Bank. The lion's share of Silicon Valley Bank clients have been repurposed to Bank of New York Mellon. And charts like these happen because Bank of New York Mellon was extremely ruthless in reclaiming most of those loans, not extending them, not working out some pseudo deal in order to let the sketchiest of the companies just continue pushing out repayments. But no, it actually maintained a very high level of discipline, proved that it deserved those contracts. And this change from 2022, this was the crisis, to now is astounding. This is an extremely solid fortress in the world of finance. Heading into any potential capital wars, there is not another bank that can withstand a siege as long as this one. And so yeah, during the crisis 2023, you see 0% inorganic fee growth. Why? Because that was the peak chaos moment in recent history. If anything, as things were calming down in 2023, it's a little impressive they didn't see a decrease in fees. These guys earned fees by doing these missions during periods of crisis. But heading into 2026, we've seen that the number of missions are starting to increase. Organic fee growth is alive. And quite interesting, the very first chart here on the left, this chart's probably the one that's most indicative of how we may be in for a more serious type of chaos in the near future. There has been a 64% increase in the number of clients who are contracting New York Mellon for more than 3 missions. This goes to show that not only are more people being dragged into conflict, but the people that were already in conflict are really starting to fight multi-front wars. As a result, the high return on capital employed that was seen back in 2022, it broke 20 at that time. I myself thought that was the top of a cycle. Many people might have thought similarly. Well, it turns out that was actually just the opening run of this escalating chaos period. And we're now looking at an adjusted return of 26.4%. Nobody knows what the actual top of this cycle is going to be. But guys, we're now closer to a 30% return every year than a 20% return, which for the record, 20% return would have already been very elite. And if the language of banking still sounds a little murky, then the simple version of this is reported earnings per share, this graph right here, has been growing at an average growth rate of 37% every single year. This is the profit being made by the front line in the capital war. And so the question is, since 2020, chaos in the world has been arguably increasing. I don't think that's controversial. One of the largest surprises was that 2022 didn't lower the chaos level, despite, by many reports, being a full-blown banking crisis. Yet here we are nearly 4 years later, and what could have been the absolute top of a cycle, what looked at the time like the peak of a cycle, has turned out to be the first step in a truly impressive profit expansion for these custodian banks. What is the real peak going to be? Is the natural question to ask. But as a value investor and myself a maintainer of the Sage Seeds artificial intelligence, which was the one to recommend this investment, by the way, we have to resist that natural question because it is far better to make an investment valuation based on today rather than trying to project forward to some magical peak. So I'm going to tweak the question. Let's detach ourselves from that. And the new question is, has the current market readjusted its valuations in response to something which has already happened and, at least for many people watching the banking sector, was a complete surprise? Did that surprise already make itself reflected in the market price of this bank? And guys, for a bank with 55 plus trillion in custodial assets, we are asking for a market cap of around 87 billion. That's right, guys. That would be less than 1% of a conservative 50 trillion in assets. But hold on, that is market cap. Banks tend to have much debt. So let's go to the balance sheet. Long-term debt has gone over 30 billion. Let's be conservative and say 40 billion. That gets us just over 120 billion. However, wait, we have to subtract the cash that it has and then we're done. So total cash due from banks is what? 121 billion. Wait a minute, if we subtract the cash it has from its market cap and debt combined, enterprise value on this is near zero. Efficient market hypothesis, my ass. So can I validate that this is undervalued? I'm the keeper of the Sage Seeds artificial intelligence, which found this originally. And yeah, I think given the current climate, given what many people have already described as the largest capital war in human history, going to the biggest, most elite, most successful custodian bank and an enterprise value of nearly $0 does seem undervalued. Call me crazy, but I might want to pick up some shares. And if I do, be on the lookout for future journal videos. Those are on the 15th of every month. And in them, we do things like peel back the specific buying and selling trades that we do on every investment. There is still some economics talk in there, but the focus of those videos are a lot more on the technical trading side. Please check it out, but also come back next month to see what the Sage Seeds Artificial Intelligence recommends next. Subscribe, comment, and like in order to help these videos get a larger audience and we can have more people to discuss these complicated issues with. Stay safe and see you, Sage Seeds.